Welcome to Gold Cipher. If you received a Form 1099-K from PayPal, Venmo, Etsy, eBay, Airbnb, Uber, or any payment platform, this is exactly what you need to watch. The rules changed dramatically in 2025. We're covering all of it: what the form means, what changed, what's taxable, and how to report it correctly. Let's go. Before anything else, the single most important update of 2025. The One Big Beautiful Bill, signed July 4, 2025, reversed years of planned threshold reductions. Here is what's actually in effect right now. For 2024 tax returns, whether you're filing now or amending, the threshold was $5,000 in payments with no transaction minimum. If you received a 1099-K for 2024, that applied to you and you need to address it on your return. For 2025 and going forward, the threshold reverted to $20,000 and more than 200 transactions, the old standard. This means millions of people who would have gotten a 1099-K under the lower rules will no longer receive one from payment apps. However, two critical exceptions. First, if your business accepts credit or debit cards, there is no threshold at all. Any amount triggers a 1099-K. Second, your state may have its own lower reporting threshold. Even without a federal form, all your income is still taxable at the state level. Now that you understand the threshold change, let me explain exactly what this form is and what it actually means for your taxes. For things every recipient must understand. Number 1. A 1099-K is an income report, not a tax bill. The platform is simply telling the IRS how much money flowed through your account over the year. Number 2. The IRS already has your copy. The payment platform sends the identical form to both you and the IRS on the same day. Any mismatch between that form and what you report triggers an automatic flag on your return. The IRS does not investigate this manually, it's automated. Number 3. And this is where most people make expensive mistakes. The number shown on the form is gross payment volume, not your profit. If you received $20,000 through Etsy but paid $8,000 in supplies, $2,000 in platform fees, and $1,500 in shipping, your taxable profit is $8,500, not $20,000. Number 4. Every major payment platform issues this form. PayPal, Venmo, Etsy, eBay, Stripe, Airbnb, Uber, Lyft, Poshmark, and more. Not everything on your 1099-K is taxable, but you must address every dollar on your return. The form reports gross payment volume, which may mix together business income, personal reimbursements, and everything in between. It's your job to separate them and document the difference. Let me go through each category. Business and gig income. Selling goods or services as a regular activity, freelancing, Uber, DoorDash, Etsy sales, Airbnb rentals, all of this is taxable and goes on Schedule C. Personal reimbursements. A friend paying you back for dinner or splitting a vacation rental, not income. But document it. Write a note in the app, keep a text message, something that shows the context. Personal items sold at a gain. You paid $300 for a camera and sold it for $500. That $200 profit is a capital gain and it is taxable. Personal items sold at a loss. You sold your old couch for less than you paid. Not taxable, but keep the original purchase record as proof. Cash, crypto, and barter earned for services. Taxable whether or not you received a form. And gifts received via Venmo or PayPal. Not income. Tag them correctly in the payment app and note the context. How you report your 1099-K depends entirely on what the income was for. 3 scenarios, and which one applies to you determines everything about your tax outcome. Scenario 1, the most common for gig workers and online sellers. Income on Schedule C, profit or loss from business. This is actually the best outcome because Schedule C lets you deduct every legitimate business expense before a single dollar is taxed. Platform fees, mileage, supplies, packaging, a portion of your phone bill, all of it reduces your net profit. Your net profit is what gets taxed, not your gross 1099-K total. You also file Schedule SE alongside it to calculate self-employment tax. Scenario 2. You sold a personal asset at a gain, a collectible, vintage item, or electronics. That goes on Form 8949 and carries to Schedule D as a capital gain. Short-term gains, where you held the asset under 12 months, are taxed at your ordinary income rate. Long-term gains, over 12 months, get the lower capital gains rate, so holding period matters. Scenario 3. Part of your $1,099K was non-taxable personal transactions. You still must address those amounts on your return and provide documentation showing why they were not income. If the entire form was issued in error, contact the platform for a corrected copy. Schedule C deductions are the single most powerful tool for anyone who receives a $1,099K for business income. Used correctly, they can reduce your taxable profit by thousands of dollars compared to your gross $1,099K number. Here are the most impactful ones. Platform and transaction fees. Every fee that Etsy, PayPal, Stripe, or eBay charges you is 100% deductible. Mileage. If you drive for gig work or pick up supplies, the 2025 standard mileage rate is 70 cents per mile. Log every business trip. Apps like MileIQ make this automatic. Supplies and inventory cost. Raw materials, packaging, and shipping supplies are all fully deductible with receipts. Phone and internet. The percentage you use for business is deductible. If 60% of your phone activity is business-related, deduct 60% of your monthly bill. Home office. If you have a space used exclusively and regularly for business, use the simplified method, $5 per square foot, up to 300 square feet, which gives you a maximum $1,500 deduction with no depreciation to track. And one deduction most people completely miss. You can deduct 50% of your self-employment tax directly on Schedule 1. That deduction reduces your adjusted gross income before you even reach the standard deduction. Record keeping is the difference between a smooth tax filing and a costly audit. If you can document everything, your return is bulletproof. 5 records every $1,099K recipient must maintain. Step 1. Download your complete transaction history from every payment platform right now. Most platforms offer a full-year CSV export buried in your account settings. PayPal, Venmo, Etsy, eBay, Airbnb pull all of them while the year is still fresh. Step 2. Document your cost basis for every item you sold. Without the original purchase record, you may end up paying tax on gross revenue when your actual profit was much smaller or zero. Step 3. Save all receipts for every business expense you plan to deduct on Schedule C. Digital copies are perfectly acceptable. Use a receipt tracking app or a single organized email folder. Step 4. And this is the single most impactful habit you can build. Use a completely dedicated account or card for all business activity. When business and personal transactions live in the same account, separating taxable from non-taxable income becomes an audit nightmare. One dedicated PayPal or bank account for business transactions eliminates the problem entirely. Step 5. Keep all records for at least 3 years from your filing date. 6 years if you significantly underreported income. For mistakes, and every one of them costs real money. Mistake 1. Paying tax on the full $1,099K amount. That number is gross payment volume, not profit. Every legitimate business expense you deduct on Schedule C reduces what gets taxed. The difference between a $20,000 $1,099K and a $20,000 taxable profit could be several $1,000s in unnecessary tax. Deduct everything you're legally entitled to. Mistake 2. Ignoring the form. The IRS received the identical form on the same day you did. If you report nothing and the $1,099K exists in their system, an automatic mismatch triggers on your return. Even if the entire amount was non-taxable, you need to address it and explain it. Mistake 3. Mixing personal and business payments in the same account. One account for everything makes it nearly impossible to cleanly separate taxable income from personal reimbursements at tax time, and it looks terrible during an audit. One dedicated business account eliminates this problem. Mistake 4. Forgetting self-employment tax. If your $1,099K income goes on Schedule C, the net profit is subject to 15.3% self-employment tax on top of your regular income tax. Set aside 25 to 30% of every payment you receive and make quarterly estimated tax payments to the IRS to avoid an underpayment penalty. Here is everything in one slide you can screenshot and save. Current thresholds. For 2024, $5,000 in payments, no transaction minimum. If you received a $1,099K for 2024, you must address it on your return. Report business income on Schedule C, capital gains on Form 8949, and document any non-taxable amounts. For 2025 and beyond, $20,000 and more than 200 transactions, reverted by the One Big Beautiful Bill. Below that threshold, apps are not required to send the form. But all of your income is still taxable regardless of whether you receive a form. Payment card transactions have no threshold, ever. If you accept any credit or debit card payment for any amount, you will receive a $1,099K. For business income, your path is Schedule C, deduct all legitimate expenses, calculate net profit, pay self-employment tax. Reduce that gross $1,099K number by every dollar you're entitled to deduct. Your immediate action plan. Download your complete transaction history from every platform today. Open a dedicated business account if you don't have one. Track every expense going forward, and if you're self-employed, make quarterly estimated payments to avoid a penalty next filing season. If you got a $1,099K, now you know exactly what it means and what to do. Report accurately. Deduct everything you're entitled to. And separate your accounts starting today. Subscribe to Gold Cipher, new financial intelligence every week.